that means we are live here on YouTube. Tackle Trading's halftime report 4/11/2019. We've got Coach Cody, Coach Noah, Coach Matt, and myself, Coach Tim. Got a full crew here for you on the first day of the Masters. And a lot going on out there. Not a lot in the market, actually. Kind of a flat day. First off, how you doing today, Cody?
I'm doing quite well. I'm testing
Cody.
out this new mic that one of my mentors got me.
That's right. So if you got a new mic, why you still got the old headphones?
Just because I like hearing it this way. The
I
speakers
see.
coming there. So
Audio through the headset and then mic through the mic. You sound
Exactly.
great, kid. Noah, how are you doing, friend?
I'm fantastic. I'm so thrilled to be here today, Tim, because there's nothing going on in the market. So I might as well have something to do, right?
That's exactly right. And Matt, who's going to win the Masters?
Tiger, if he can hit a 3-foot putt.
Well, has he not been hitting 3-foot putts?
Don't get me started. I'm not happy.
I haven't seen a single stroke. But dude, I love the Masters, though. Obviously, golf season, not here in Utah. We've had snow and rain the last couple of days. So I got all excited about spring weather, thinking about golf. It's not been in the cards, Matt.
No, it's the what was it called? The winter bomb cycle is coming through the Midwest, the mountain region. Hasn't been fun.
Yeah. Let's break down the markets one step at a time here, boys. Let's work through it as we go. S&P 500, obviously here on a doji. Noah, we've got some upward trend, but you're drift and you're also range up.
Hey, real quick. Are we live on YouTube? Because I can't get it working on YouTube.
That's it does say live on Zoom. Let me double check.
We are live on YouTube. I'm watching us. We have the team already saying hi to us. Coming in, we already got likes and shares going.
I see.
We're live.
I'm not seeing it either. So there you go.
Yeah, I'm just saying Tackle Trading halftime report. Hit the play button.
Oh,
there we are.
Okay, there we go.
I'm not seeing it
live.
There we go. It was
right.
Technology. It wasn't me. It was
user error, is what it was.
Nah, it's got to be in my magnetic personality. It always interferes with my electronics.
Yeah,
like Nicholas, short Comcast.
All right, I think we're ready to rock and roll, guys.
always short Comcast, by the way. That stupid company. My internet keeps going out. Brand new construction, brand new neighborhood. I can't get a Wi-Fi signal to hold for 24 hours. Gamers tell me that's common, but it's driving me nuts lately. S&P is flat to down here today, Matt. Down 0.13%. Obviously not a lot going on. We'll go through the news headlines and whatnot. I saw quite a few things in terms of companies that were interesting to me today, but the overall market is really stuck in the mud, and I put a poll up there in our clubhouse recently on how you're playing this market right now. Matt, how do you approach a market where earnings are going to be coming down the pipeline? It's not going to stay stuck in the mud forever. You've got a doji today. What do you do on a day like today?
It's just a conservative day. There's not a lot happening. I mean, the market's been really kind of in a fade action the last 4 days. And quite frankly, I think the entire market is waiting on a close above 2,900 to start the buying party again.
Yeah, Noah, how do you read this technically? It feels like it wants the all-time high. It feels like we're just, fading higher, but we've got earnings here. How do you approach a day like today?
Well, I think we have to be expecting a pullback. Just because of the location of it. I mean, we're up near that high. We know there's overhead resistance. So people are tentative. They don't want to buy, just like Matt was saying. And you're also range up. So you look, back at the last cycle and you see that same kind of movement up. You're seeing that slow down.
Mm-hmm.
And those inside candles, everybody starts raising their stop losses up. And so everybody's kind of ready to sell. And as soon as you see any selling pressure enough to take out the lows of the candlesticks, it creates a bit of a sell-off. Mm-hmm. And it's mostly just profit taking, but it does cause a drop back. And there's actually a seasonal expectation. Mid-April has a drop back, and then it rallies through May. So I wouldn't be surprised at all if we saw a couple 2-3 days down before it powered on up to those highs.
Yeah. Top 5 gainers on the market today. Fastenal is first, number 1. URI, PNR, Nielsen Holdings, and then HII, the Huntington Ingalls Industries. I've never even played that company, but it is up today. I think we're going to start with Fastenal, though, guys. They had earnings. Fast is an S&P 500 company. They gapped out 4.3% on earnings. It's been in an uptrend. When you see some of these companies coming through and the earnings are starting to trickle in here, it's just a reminder. Give me a chart on FAST, if you would, Noah. earnings season is going to be upon us, and tomorrow we have a lot of companies coming down the pipeline. First off, reaction to a gap out like that, Noah.
Big gap. You got a lot of energy, nice uptick in the volume on that with the earnings. So with that type of a gap, it already retested that high. And I always watch to see whether it takes out the gap high or the gap low. If it takes out the gap low, I might expect it to fill. If it comes in and that retest of that old resistance holds, I'd be happy to buy it on taking out the high. So a lot of energy. People obviously like it. I wouldn't be surprised to see some profit taking off that, but it certainly introduces new information there.
Wells Fargo and JP Morgan lead the market tomorrow. JP Morgan is a $345 billion company. Obviously, it's a major component. Bring up JPM if you would. Tomorrow morning, we're going to have earnings before the market. Matt, when the banks start to trickle in, is there anything specifically you're going to be looking at from these bank earnings as they start?
Guidance, and then more guidance. That's the only thing I'm focusing on. I think EPS numbers are going to come in line for the most part, because that's what EPS numbers usually do, come in line for the most part. Typically, you see about 68 to 72% of companies reporting better than expected earnings per share. Revenue's usually a little bit less than that. So, somewhere around 50 to 55% of companies usually beat on revenue. And then the important part of that is the guidance. The guidance, remember, no company today is trading for today's revenue and today's earnings per shares. They're always forward thinking. The stock market is always forward thinking. That's why, like in the recession, it happened in 08, but the market started going down in 07. So the market is always pricing in a future expectation. And so with the entire market narrative for the last 3 months being the fact that we're going to see a reduction in the first quarter, we're going to start to see a slight improvement in the second quarter. By the third and fourth quarter, we should be approaching that 8% close to double-digit earnings growth like we were seeing in 2013 and 2014. So that's what I'm looking for in these banks' earnings, and not just the banks, but every company. Is I'm looking at their guidance. I mean, you take Fastenal's earnings report, beat on earnings per share, 68 cents versus 67 cents, came in line on revenues at 1.3 billion. The revenue up 10.4% year over year. They didn't release forward guidance, and that's the one thing that I was looking for. So for me, the actual earnings report was okay. It wasn't great. It was okay. It was a very, very lukewarm earnings report, in my opinion. And that's why you saw after the gap, you see a little bit of mixed action on Fastenal, because it does leave a little bit of uncertainty there. So I'm looking forward to guidance more than anything else.
Some companies that go ahead.
Oh, I was just going to answer Six's question over in the chat. Guidance is simply the forward-looking expectations, saying this is what we plan to see in the future. This is what we think is going to happen. So when you hear us say forward guidance or guidance, we're talking about what the companies have said the future might look like.
Yeah. So think about like this, Six. So let's say I have a company and I expect that company to come in at $2 on earnings per share for 2019. And after the first quarter, I see something a little different in the data. And so I lower that guidance from $2 per earnings per share to say only $1.5 per share. That's going to be priced into the marketplace, because now what we expect in the future is less earnings, less revenue. And so that's going to have a negative impact on the stock valuation, versus if I say I did expect in 2019 to make $2 per share, but now I'm expecting after a robust, first quarter earnings report to be in the $2.3 per share. Well, that's going to have a positive forward expectation on the guidance. So guidance to me if I had to rank from the importance in an earnings report, and remember, there's always these three very, very important concepts. You have revenue, you have earnings per share, and then you have forward guidance. If I had to rank those, and you guys can disagree, I'd rank them guidance, earnings per share, and then revenue. Revenue being a distant third in comparison to earnings per share and forward guidance.
Yeah, I like it. And obviously that guidance number, Matt, we've seen a couple of already come out and change guidance, and they can do it randomly. It doesn't have to happen, on an earnings date like some companies do. But we also can get downgrades randomly. I want to bring up Waste Management next. Obviously an S&P 500 component that is down here today. And it was a trade I had. So that was it's never fun when you get random.
Thanks.
Yeah.
Really appreciate that one. Who did that? Stifle Nicholas? Who's Stifle Nicholas? Can we short
them? You don't even know who they are.
Let's short them.
Yeah.
I don't know who you are, but you downgraded a stock I was in.
What are
and
you
I don't
doing?
like it now.
That was a perfect bullish retracement. Come on.
It was a beautiful setup. It was a beautiful setup. Yeah, pulled the trigger on it, but that's trading, right? I mean, that's why position sizing and risk management are everything, because you can have random things happen that you could not have planned or predicted.
Well,
They come out and
let
gap the
me
stock.
speak to that, Tim. For a new trader, that's very, very frustrating. And for a veteran trader, that's frustrating. But for a new trader, you might overestimate about what that means. Like, oh man, the market's always against me. Oh man, the market's just random. No, those variables, they work both ways. They really do. You make 1,000 trades, those variables on upgrades, downgrades, random news, good news, bad news, sometimes they help, sometimes they don't. This is the game we play.
Mm-hmm. Yeah, that's right. That's right. Sometimes they fall in your favor, sometimes they don't. If if you trade enough, and you should have a lot of different trades, obviously, through the course of the year, it should kind of come out in the wash, Matt. Your technical analysis should win the day. And
Well,
money management.
and let me speak to the moose lady. A big drawdown should never occur on one trade. That should never occur. Maybe 1 to 2% drawdown. That goes to position sizing. Remember, whenever you're doing swing trading, especially when you're doing options, you have a very important concept called the risk of ruin. And what the risk of ruin states that if you risk over 4% of your portfolio in any one moment in time, you're taking way too much risk to that portfolio. And that all starts with position sizing. Position sizing is absolutely vital when you're trading. And when it comes to swing trading specifically, like the waste management trade we were looking at, you have to position size accordingly. And when you're trading options, that has to be less than 4%. I mean, Tim, Noah, Cody, what's your position size rule on a swing trade?
Oh, risk rule, Matt, less than 1%.
Less than
I don't
1%.
take 1% risk, more like 0.5%. Yeah.
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 Maybe
Max,
position
I'd
size
take.
2%.
Yeah.
Yeah, max would be 2%. And that's on something that even then I'm ready to take a quick profit the next day and get out. It's not going to sit on there for long, but max maybe 2%. But
Yeah.
Mm-hmm.
And that depends on account size, obviously. But remember, position sizing is vital. It's absolutely vital, especially when you're trading leverage tradable instruments.
Yeah, I agree with that. The other area of the S&P that I think we have to address and talk about is healthcare. Bring up XLV, if you will, before we move on from the S&P 500. Healthcare is just taking it on the chin here today. And the healthcare plans, we've talked about this, the split and the difference in healthcare. UNH just down 3%, Cigna down 2.7%, Humana down 2.3%. We're seeing weakness in major names in healthcare plans, in biotechnology. I'm ready to start moving this into the bearish territory on the yard markers, Matt. I know we're at the 50, and mostly at the 50 because drug manufacturers like Pfizer and Lilly and those other ones have been real, real strong. Noah, what's your read on this chart here to start with?
Well, we had a pretty clean consolidation pattern in there, and it broke, and you could probably redraw that bottom line to contain that, but I think it's violated to the downside. And the consolidation patterns, these, you don't never really know which way they're going to break out, but they do tend to break. And so seeing the downward pressure today, I think that leads me to believe we're going to see a break to the downside, just from a technical perspective. Mm-hmm. So anytime, again, prices pinch down into a consolidation pattern, expect a breakout. The challenging part is which way. This is a good scenario for things like K trades or straddles when you see the whole sector consolidating. And you can go look at the stocks inside the group and you see very similar patterns.
Mm-hmm. Matt, what about you? I mean, we are in a range there. You could pull back and say that's more neutral, but I see weakness, especially compared to what the market's doing. What's your take on healthcare?
I got it breaking down out of a symmetrical triangle is what I got it. And when you break down out of a symmetrical triangle, remember you have pressure being putting on price when you have an upward movement in support versus a downward movement in resistance. And so over the course of from mid-March until really kind of today, you've had this formation forming in healthcare where you've had a lot of difference within the specific industries within healthcare. And that's really what's been creating this symmetrical triangle where you have that upward movement in price in some capacities and you have those downward movements in price in others. And so that creates this triangle type formation that is extremely volatile. Remember, and I said this the other day in the halftime report, Tim, I don't like trading these types of patterns because they are explosive when they do break. Now, typically speaking, the probability states that it should be going to the upside, going in line with the longer term trend. But right here in this pattern, you actually have a longer term decrease in resistance versus a shorter term increase in support when you're actually looking at this pattern on healthcare. You break down out of that pattern on healthcare, probability's got to be to the downside at this point.
Yeah, and there's some real big names that are grabbing my attention on their charts here. Give me a look at CI, if you would, here, Noah. And I was sitting down with my daughter this morning, boys, and I was trying to teach her about trading. She's 18 years old. And I was going through my routine, and Cigna's on my watch list. And go down to an intraday chart, Noah. And that's a 15-minute.
Yep.
Give me 5, if you would. Yep. So when it broke below support there mid-morning, you see that about you're on, yep. What day are you on here?
Oh, I think I'm on
Thursday.
Yeah.
There.
Okay. So when it broke below 165, that's where I shorted. Okay. And I was trying to talk to her about reward to risk and position size and how the whole thing worked. I'd already managed all my other trades in the account. We're through the mid-morning stuff, and I went short Cigna. And as it started to go down, I started saying things like, honey, there's your gas money. There's a full day's wage at your job. Okay, now, honey, we just made a week's worth of work that you work on 40 hours a week. And I did that over the course of about 2 hours. Now, this one worked. And I even tried to tell her, I said, they don't always work, honey. You make, you lose, you win, you lose. And it was really an eye-opening moment for her. And it was a real kind of fun moment for me as well, as she's watching the accounts and watching how things are working as I'm trading to the downside and playing that down. You know, market knowledge creates opportunity. There's no doubt about it. And even on a flat day in the market, Matt, there's always something you can do to go out and create opportunity. Day trading is not for everybody, and it's not even for me all the time. It's not the major focus of the way I approach markets, but I happen to day trade this one to the downside. First off, just Matt, what are your thoughts on that story?
Well, number one, I absolutely love that story, and I know the backstory behind that story and how important that moment for you was. So just as your brother, I just love every single aspect of that story. And number two, it really is important. I mean, this is a young woman who literally is working 3 jobs to try to better her life. And now that she's now becoming part of your life a lot more, she's seeing this as an opportunity to learn and to help her out. And, you know, it's just, it's absolutely amazing, Tim, because this is going to help her out in every aspect of her life as she goes into her next phase of her life.
Mm-hmm. You know, mindset is everything. And the kid's a hard worker. She's a saver. She doesn't use debt improperly. She doesn't borrow anything. She doesn't even own a credit card. She saves everything she has. She pays with cash. And I'm trying to teach her about investing.
We need to remedy those things.
I know. And we talked about it. We talked about the capital markets. I even showed her the article I posted on Facebook the other day, how much money Americans have lost from savings.
$500 billion in the last 10 years.
In 10 years that the Federal Reserve has taken from people. And then I'm showing her ways you can make money and compound even slowly and simply. And then the advanced stuff like day trading.
Think about that for a second, Tim.
Yeah.
In the last 10 years, savers have lost $500 billion. $500 billion. What have investors made? There's been an increase of about $16 trillion in equity value?
Yeah.
$16 trillion in equity value. And that doesn't include real estate equity value. That's just financial equity value.
That's right.
Yeah. If you need evidence if the saver ever needs evidence to realize the faulty mentality of the savers, just look at that over the last 10 years. The Fed has destroyed savers, guys. There's no argument for saving money any longer. No argument for it.
Mm-hmm. I get why, out of ignorance or fear, somebody saves, and saving for enough to cover your bills if you lose a job.
Not after 10 years. I don't get it. No, I'm not gonna sit here and be an apologist for consumers. No, after 10 years, after 0 interest rates, no, absolutely not. There's too much opportunity out there.
There's way too much opportunity.
That's just the cost of ignorance, man. I mean, the number of people who actually understand monetary system and how the Fed destroys value in the currency is what? Less than 1%? Yeah. So the cost of ignorance is high.
Well, it is, but even if the people that understand Fed policy is less than 1%, everybody knows when you go to a bank and you put money in a bank, you're getting 0% on the interest rate. Everybody knows that we're inflating at 2%. Everybody knows that the value of the dollar goes down over time. So when you're talking about that 500 billion, Tim, you're not calculating in buying power. You're not calculating in the cost of inflationary impact and the devaluation impact over the last 10 years. If you calculate that, we're talking trillions and trillions of dollars in lost buying power. So again, I feel for the saver because of what the Fed does, but you can't fight the Fed. They're not going to change. I mean, Larry Kudlow literally today came out and said, I don't think we'll ever see a rate hike in my lifetime again. Literally said that.
It's crazy to me.
He is kind of old, so I don't know if that's that.
I was wondering if Noah was going to.
Yeah, I was there. Yep, there we go.
I was wondering. I was tossing Noah a softball on that.
That was easy, but he's not wrong. I don't think he's wrong. So,
well, if you remember, Janet Yellen said she'll never see a financial crisis again in her lifetime, and then in December of last month, we went down 20%.
Also, again, statistically speaking, that's probable. So.
It's in the range. It's in the range of probability.
Back on a daily chart, boys. Let's keep working. It's crazy to me. All of that, believe me. Larry Kudlow's comment is insane. But
he also said in the exact same statement that the U.S. economy was the best economy that it's ever been. But yet we needed a 50 basis point rate deduction. It's so funny. The insanity of
amazing economy, but yet we need to stop tightening, and
we'll never see a rate hike again in our lifetime.
Oh, that makes a lot of sense. Good job,
and
guys.
in the Fed minutes from yesterday, there were 26 moments in the Fed minutes where they said the word strong or stronger economy. That was up from 22 times from their last Fed minutes.
Oh, they're keeping track of that.
Oh, yeah.
26 over 22. It's
man. There's people that keep track of everything, Tim.
Every word is.
What was the patient to strength ratio?
The patience to strength ratio, it was about 3-to-1 on the strength.
The craziest thing is they'll always like caveat it. It's like every sentence is the economy is really strong, but what we need to do is be patient. We have such a booming infrastructure, but we also need to make sure that we're not over. It's like,
well, it just goes back to the statement of, with all due respect, right? You're amazing, Noah, but with all due respect.
It's like, all right, wait for you to slap me in the face.
Yeah.
Oh my, it's crazy. Let's keep working through the markets one step at a time.
Tim doesn't want to talk Fed today.
I do want to talk Fed, but we'll talk Fed when we get to the dollar. We'll table it and we'll get there.
We did have the Fed minutes yesterday. I'm just saying.
I haven't read them.
That's why you don't want to talk about it.
Don't waste your time.
Okay.
You can't be part of the conversation. He feels left out, guys.
Do you need to read them now?
Oh, no, I think I'm all filled in. I'm good. United Health is the biggest healthcare plan company in the market, and it's actually showing a lot of weakness, especially on the weekly chart.
That weekly chart looks nasty.
I love healthcare from a long-term perspective. Give me a 10-year timeline. I'm bullish on healthcare. There's no question about it. It's taking over a larger portion of the GDP over time. I understand why. The fundamentals are strong, but man, Matt, that is an ugly, ugly, ugly technical chart. You're looking at support. You're looking at a rotating pattern. That's kind of like the 5-point reversal kiss of death. Here we go, breaking down below the support.
No, it skipped 2 points of it. It didn't care. That is a nasty, nasty reversal pattern. You got a lower level of resistance on the weekly chart. You're pressing up against a major level of support right there at about 233. You break 233. Oh, wow. Yeah, you're 200.
Yeah.
You're 36 points down. That has to be a target, 200. So yeah, keep an eye on United Health here, guys. That's a really, really ugly weekly chart.
Show you why I'm kind of rotating on healthcare here. Look at Humana, HUM. See, to me, when I start to see little sectors and industries pop bearish, that's also equally ugly. These healthcare plan companies are just down. That's a break below support, Matt, on the daily. You've got earnings.
Well, yeah, and we called that one literally the day they were on the hill, Tim.
Yeah.
Literally the day they were on the hill. I told the halftime crew about a story about the last time they were on the hill, and Hillary Clinton came out during the 2016 election cycle and said, we're going to regulate the biotech stocks. What happened to biotech? Mm-hmm. They all got slaughtered. So I mean, these are patterns that do repeat, and we've seen it play out over the last month and a half, Tim, and it's just continuing today. Humana breaking short-term support at 260 by 258. That's a trigger. That's a trigger in front of an earnings report. That's nasty. Two big red in a row.
Big
There's
red.
that momentum.
Big red. I haven't had that gum in a long time. Give me we already looked at Cigna. CVS, Noah. Just weakness across the board. And then even your biotech companies, the major name in biotech, I always think Amgen, Gilead, but Biogen is the first name that comes to my mind when I think biotech. And that's not great either. They had that news come out last month, gap down, backfilled, even a little red candle here today. Now you do have some strength. Companies like Lilly, okay. Companies like Johnson & Johnson still holding up relatively well. Merck holding up okay.
Lilly got a downgrade today.
Did they?
Yeah.
I saw that red candle.
Yeah, I'll get you the company that did the downgrade. I can't remember who it was. Guggenheim Securities did.
Might be a little sector rotation happening here. Obviously, we've seen some weakness in some of these healthcare names for a bit. Let's move on to the Dow Jones Industrial Average, if you would.
By the way,
contract.
Guggenheim said Lilly has the best long-term growth profile in pharmaceuticals, but we're going to downgrade it anyways.
What was the reason?
They said it's already baked into the price.
Well, believe me, I do like the drug manufacturers still bullish long term, and I do like Lilly, but a downgrade and bringing it back when the whole sector is rotating, maybe it's moving some of those more bullish companies into a neutral range, which I think is also maybe true here on the Dow. I've got a feel of momentum change, guys. I know it's a pullback pivot. You've got old resistance. Some technicians could fight over this one, I'm sure. I'm going to start with Matt. Matt, what's your read on the Dow?
On Dow, you're testing support. You're testing support. As long as you stay above 26,000, you're some degree of bullish. You're forming a little bit of a retracement coming down to test those old resistance levels. We'll see what happens here.
Yeah, Noah, any other addition on the Dow there?
No, I agree with that 100%. You do have some overhead resistance out there, the 26,900 and some odd ballpark. But yeah, that little pullback, if that 2,600 zone holds, I agree with Matt. I think you'll see a rise. But if it doesn't hold, that changes the story back to neutral.
For a technician.
Very quickly, we like that as a technician.
Yeah.
We like it to establish a new high, and we like it to come down and retest that new support level. And if it can hold that new support level, that's a buying opportunity.
Yeah, I agree with that. A technician will love this pattern, WBA here. And obviously, we're talking about drugs and healthcare and all that kind of stuff. Pharmaceuticals, well, your pharmacy is the one who delivers it. Walgreens Boots has been bearish. I love gap continuations, Matt. A lot of traders would shy away from any gap. I know beginners. I've been around beginners, forever, as long as I've been coaching and teaching. Why do you think new traders are afraid of gaps, first of all?
They don't understand the psychology that creates a gap.
Mm-hmm. Noah, what about you?
Oh, I think it's just the measure of volatility. I think the size of the gap and not knowing whether it's going to fill like a common gap or run like a runaway gap, then, they don't know what to do in it. So they don't know how to behave. And the increase in volatility, I think, makes them want to sit on the sidelines. But I think once you understand the general nature and how they play out, it's much easier to trade. And that just takes practice. Mm-hmm. You got to go find some gapping stocks and start paper trading them to really start to cut your teeth on that. Because I love gaps because they do create really great trading opportunities. It's new information. The market really shows its cards with the gap. And then, it's really either going to fill because it overreacted, or it's going to continue because the news was as significant enough to actually perpetuate a move.
One of the companies grabbing my eye on the upside on the Dow today is Walmart. Walmart pressing above 100 here. And I know it's been a long wait here for this thing to try to rally, Matt. We now have 5 days up. And, when you rotate out of aggression, sometimes you go into conservative companies and staples. And Walmart is one of those that always comes to mind. Is that a breakout? Number one. Is it tradable? Number two. And how do you read the chart here? Start with Matt.
Yeah, I mean, technically speaking, you got to call it a breakout when it's breaking out of $100, which has been a very important number for Walmart over the course of the last 6 months. Is it tradable? That is a different conversation. To me, no, I'm not triggering above 100 on Walmart this time.
No, what say you?
Well, I waited patiently for this breakout. And now I'm disappointed with it. I thought it was going to run earlier, and I would have had more confidence in the run had it occurred earlier, but
Yep.
it didn't. It just loitered and hung out. And now that it is starting to make that move, I can't help but notice that the volume is extremely unimpressive on that rally. And so, you've got rising prices on decreasing volume. I don't think that's a true sign of strength.
Mm-hmm. Yeah.
That's a great point, Noah.
Move on to the NASDAQ if we can. None of the major names are catching my eye today. None of the FANGs. When the FANGs are boring, the market's probably going to be boring as well. NASDAQ up at resistance and 76.28. We're within 100 points of that resistance point all-time high. Let's read this one technically. Noah, give me a quick look.
Just slowing down before it hits that brick wall of all-time highs. That's, people get really tentative whenever you're approaching resistance. So demand diminishes. So it'll hang out up there. And I don't think you'll see a breakout unless, I think we might see a pullback first. But once you do see a breakout, expect activity to increase. But prior to that breakout, I think everybody's just playing wait and see. Nobody really wants to be the first one to buy near the all-time high.
Mm-hmm. Yeah, I agree with that. Give me the RTY if you would. And Matt, this one's your favorite index to measure lately, I know, because it's so dynamic as it's just holding 1600. What do you expect from the Russell, if anything, Matt, as we're heading into earnings season?
Nothing. Again, to me, it's always been about 1600 on the rut. Okay. That's what the analysis starts with. That's what the analysis ends with. If you break 1600 on the rut, and I don't even want to say a complete catch up here, Tim, because when you look at the percentage of growth, not just in terms of trends and pattern, the S&P 500 is up 15.2% year to date. The NASDAQ's up 20% year to date. The Russell 2000 is up an impressive 17.3% year to date. Now, most of that on the heels of what happened in January and it's in February, and it's really kind of been in a neutral sideways pattern since then. But the Russell can fly. Out of all the indexes, it is the Russell that can fly the fastest. And so if you can break out of 1600, you should see price appreciation. And unlike those old all-time highs above the, like I believe it's 2947, if you break out of 2900 on the S&P, you still have that all-time high to contend with. You break out of 1600, you're running to 1700, which is a good price target for the Russell 2000. So for the bear calls out there that in condors, keep an eye on 1600. I'm not saying you have to aggressively manage it on top of that. You manage the strike price more than anything else. But that 1600, if it's violated, the Russell can fly.
Mm-hmm. BBBY is one of the top losers today on a downgrade. It looks like they did gap down these brick and mortar retail. I know it was back into an uptrend. Actually, earnings there did gap down 9%. They've been a stay away from me unless I'm shorting or bearish on them. Bed Bath & Beyond, I haven't even touched for a long time. When's the last time you went into a Bed Bath & Beyond, Noah?
Oh, I don't have to do that ever. Yeah, the way I play my cards, I don't have to go into those ever. It's probably been a decade plus.
Yeah. Cron also down 6% here today. Medical marijuana. This is a dirty, sexy money candidate. These companies are volatile.
Real quick on Bed Bath & Beyond, guys, just giving the numbers. Beat on earnings per share, came in line on revenue, and downgrade on forecast came from about average of 215. Now the current is 180. So a big downgrade on guidance on Bed Bath.
Gotcha. Matt, bring you in here for a minute. Give me MJ if you would. We're looking at Cron, but Tilray's also down. It made me want to think about the marijuana ETF MJ. This is a trend that is changing and rolling over here, Matt. I know they have been high flyers, they've been movers. Everybody's been focused on them. They have validity and viability long term, but valuations are a little out of whack as well. What's your read on that chart?
That might be the understatement of all time. Valuation's a little out of whack. There's a lot of hype over the marijuana play. There's so much hype over the marijuana play. 2018 was the rotation into marijuana versus Bitcoin. We all knew that. We all saw it happening, and a lot of people are betting on the marijuana play over the next 10 years. And I am one of them. I do believe in the marijuana play over the next 10 years, but that doesn't mean it's not going to have tremendous volatility, especially early on. And that's what you're seeing here. You're seeing a little bit of volatility. You're seeing patterns shift. The 20-day moving average is rolling over the 50-day moving average and perhaps breaking that and violating that over the next couple of days. Keep an eye, if you're looking at MJ here, the ETF that tracks the marijuana companies, keep an eye on 35. If you can break 35 to the downside, 32.5, and if you break 32.5, 30, and if you break 30, you're talking all the way down to 25. So keep an eye on that 35, and if you do break it, you're walking down the stairs.
Yeah. One company grabbing my eye from my watch list on the NASDAQ is going to be Match.com, MTCH. They don't have earnings out until early May. As I'm going through my process, I'm looking for things that could be breaking out and whatnot. By the way, welcome, Frank. I saw him talking breakouts in the chat. Breakout Frank. Here we are approaching 60. I know you had a tail on earnings back there. Here's a simple question. Number one, it's a tradable breakout if you break above, but where would the trigger be? Does that tail come into play, Noah, or would you have to break that down intraday and kind of see more detail?
Yeah, I'd want to break that down intraday, get a good look at hourly chart, 90 days. I wouldn't imagine it spent that much time trading up there. Mm-hmm. So I think the real resistance zone's 59.50-ish. And I don't, after it's been tested a few times, I think it's one thing to remember is every time it hits a resistance zone, it clears out some of the available inventory that's holding prices down. So that's why things like cups and handles and ascending triangles tend to eventually break, because as they hit that resistance zone, it clears out available inventory. And if the buyers are still coming, there's no inventory at that price. And so when it breaks out and prices do start to go higher, it'll run until it finds the new pool of inventory, which, in this case, I think a target's easy 65. So I like the setup. I think you could get in, break down intraday and find a clean trigger, and buy on that confirmation with good risk management.
Yeah. Move on to the dollar, if you would. Let's go through currency and commodity markets here as we work through our daily routine on our halftime report. And by the way, welcome out halftime crew. If you guys are a loyal member of our halftime team, it's great to have you guys. Always give us a like and a share. We like getting that out there. $ DXY here, Matt, is now neutral in a range. I'm still fundamentally more bullish on the dollar than I am the other rag currencies out there, like the euro and things that are happening along those lines. But it's not like I love the dollar. And no fiat currency is going to get me to fall in love with it. Are you ready to move this into a neutral call here?
I'm still slightly bullish.
Yeah.
I see a little bit of support holding there at 97. I am not looking to trade aggressively the dollar until we break out, though. And what I'm looking at on that potential trade is outside of day trading, obviously. But in terms of swing trading, I'm not buying this pivot here. I'm waiting for a breakout of that 97.70 before I get aggressive. And if you do break out of that 97.70, I can promise you the euro's breaking down out of 112, and that's going to be a good trade.
So yeah. I have a question for you on that, Matt. In the face of Kudlow comment saying we probably won't see a rate hike in his lifetime.
Kudlow's lying and he's old.
Well, yeah, but still, I mean, without a rate hike, what's the real draw to the dollar other than by comparison? It's not
easy. 2.5% interest versus 0 on the euro, 2.5% interest on the dollar versus negative 0.75 on the Japanese yen, 2.5% interest versus a negative 0.1% on the Swiss franc, 2.5% interest on the dollar versus 0.5% interest on the pound, 2.5% interest on the dollar with the strongest economy in the world versus a eurozone that's trash. So that's the argument.
So what you're saying is 2.5% is better than a kick in the shins, right?
Well, it's also better than the 10-year Treasury note. I mean,
you're getting less than 2% on the 10-year. So you're getting 2.5% on the dollar right now. Now, is that good? No, it's not good, right? It's not, but it will offset inflation. And all of that leads into the carry trade, guys. Mm-hmm. If you're talking the carry trade, which is the number one trade in the world, typically that means you're selling the dollar and you're buying other currencies with higher interest rates. That's not the case right now. The dollar, out of all the major currencies out there, and this is kind of rare, guys, the dollar actually has the highest interest rate of all major currencies out there right now. The New Zealand dollar is at 1.75%. The Australian dollar is at 1.5%. So when you're looking at the dollar versus relative to every other currency out there, you're talking about a slowing growth environment in every one of those other currencies. Every one of those other central banks have historically pivoted to the same degree that the FOMC have pivoted. So you're now talking about a lowered interest rate environment around the world, negative interest rate environment around the world. We're talking 13 of the top 20 economies in the world have negative interest rates. And the number one economy in the world, the United States, which is not necessarily slowing down in the same type of capacity as the rest of the world, and I can get a higher interest rate, that's the case for the dollar.
Yeah, which is why the moderately bullish or mildly bullish call still does make a lot of sense, because people are holding on to it. And if you're an institution, Matt, you're looking at where you're going to put all that capital. You got to put it somewhere, and the bond market's not attractive. And if they're not going to raise interest rates, I mean, it's not like those are going to go up either. So yeah, dollar slightly fading higher here, and that's going to impact all other currency relationships. Give me a quick look at the euro dollar cross pair, biggest one in the world. You know, we've seen weakness out of Europe this week. I know it held support there in the short term. Is this a bear retracement in that regard? I know it's not a lot of distance, but currencies aren't moving as much lately. Matt, what's your read on this cross pair?
It's a bear retracement in the short term, but only the most aggressive traders would take it.
Yeah, I'd agree with that.
Crude oil. And by the way, Cody took it.
I took
Cody
it.
is very
Cody
aggressive.
took it, and he took it in front of me. I haven't even taken it yet. I'm taking it under 112.50.
Well, I want to add a caveat to that. I've had a carry trade on the dollar euro cross pair
for a while,
for quite a while now.
Yeah,
so every time it's oscillating, I know that, you know, I'm collecting that carry trade versus the up and down the delta moves of it. But then on another portion of my trading is I'll swing trade this intraday. So I will actually day trade this. That's one of the reasons I'm already in it ahead of this move. Because on the hourly chart, I like the way the pattern looks.
No, and when Cody told me he took the trade, I was like, good trade. I'll take it with you. And literally the only difference between Cody and me is I was looking at it at a different time frame than he was. And so for me, looking at it, 45 minutes ago, I just told him, yeah, I'll take it under 12.50.
And it's getting down there.
And 12.50 is the pip. It's $1.12, 50 pips, 12.50.
I see it. Support. Yeah.
Well, it's not only breaking that support level though, Tim, at 12.54. You have an old resistance level at 12.50 as well that you have to contend with from last week on Thursday and Friday and earlier Monday coming into the week. So you can certainly trigger on a day trade underneath 12.55. There's nothing wrong with that. I'm just looking at that 12.50 handle as the old resistance. So I'm just approaching a little bit more conservatively.
Yeah, give up 4 pips. Make sure you get confirmation. I mean, that's
well, when you're going to be on a plane and not be able to actively manage it, that also makes a difference.
No, I'll be out of the trade by the time I get on that plane.
Yeah.
I won't carry a day trade through using Delta Wi-Fi connection from 36,000 feet in the air. That's not it. I've tried it. Come
guys.
Come
on, live a little.
I'm dead serious. I tried to trade a news-based trade in currency one time from a Delta Wi-Fi 38,000 feet in the air. No, my fill rate was not good.
Yep. I've done that too, Matt, and it's one of those things where you don't want to be in the trade when you're in the air.
No, I'll do a stock. I got no problem with the stock, but on a currency, on a news base where bid-ask spreads widen up anyways, it was dumb. It wasn't the brightest thing I've ever done. I was bored is what I was.
Sometimes you get bored on airplanes. I get it. Don't day trade on airplanes. That's the rule. It's a new rule.
It's a new rule.
Yeah, I agree with that rule.
Don't trade on airplanes. All right.
Don't day trade on airplanes.
You
can trade on an airplane. Just don't day trade on airplanes. Move on to crude oil if you would. Crude is actually looking like a pullback here today. There is some volatility, obviously, when the dollar's up a little bit, crude oil coming down a little bit. We've talked about this. Still fundamentally and structurally and technically bullish in the short term. Matt, this could deepen, and I would love a pullback on crude back to 60. I don't know if I'm going to get it. It's only one candle here. What's your read?
I love the pullback here. Hopefully it pulls back to the breakout channel at 62.5.
Yeah.
I'd love that.
Yeah. So 62.5 or 60. I instinctively
either one. Yeah. The pullback to 62.5 would be based on the pattern that's been breaking out of that $2.50 step range we've talked about, coming back down into that breakout channel, confirming. That would be more like a flag-based pattern, to be honest with you. A pullback to 60 would be a true retracement.
Yeah. Next up is gold, the GC contract.
Getting hit today.
It is getting hit today. Guys, I got to tell you, I'm very concerned about gold breaking below 1280. Well, I'm not concerned about it. I just see the chart. I think that there would be an opportunity to short gold at that point and trade it to the downside. This was a very big red candle here today, down 1.3%, but you've got some major support down here. The pattern's ugly, especially when you're thinking about head and shoulders and momentum and pivot relationships.
No, draw a trend line connecting resistance levels the last 3 pivots now on gold. Yep. I mean, you came smack dab into a decreasing resistance trend line, and it got hit on its head because of it.
Mm-hmm.
Now you got a descending triangle formation. 1280 is in sight to break here. Not today. Not today.
And quite frankly, some of the big concern I have is in the volume and candle relationships. The sell-offs are strong and fierce, and the rallies have been light doji candles. Now, that's traditional in a lot of asset classes, but it's starting to feel like people are distributing their gold shares or whatever it is they're holding on to, and prices are coming down more aggressively than they're rising. Noah, what's your read on this whole chart and just gold in general?
Well, I mean, I can see where you could possibly make a case for some long-term bullishness in here. But the short-term pattern's definitely bearish. You got the lower highs, you got the known support zone, definitely forming a descending triangle. You could call it a head and shoulders type pattern. But once that support zone breaks, I mean, where would an investor have a stop loss? Down below support.
Under 1280.
Yeah. So if it breaks support, it just starts to clear out the investor class stop losses, and the bears pile on and do some short selling, and it probably drops down towards 1250 without too much standing in its way. So, I think a breakdown there could create a short-term trade. And I don't love the idea of short selling gold just from a long-term perspective, but from a short-term perspective, I think it's one of those things where if you see an opportunity, you can take it and turn around and take any profits and reallocate them into something else.
Yeah, I'd agree with that. Give me a last look at Bitcoin. Then we're going to get into our Theta Thursday topic here and BTC.
Before you get into Theta and take over from there, Tim, I do have some news that we have not covered yet.
Go ahead.
That is important. Tesla, Panasonic suspend Gigafactory expansion. Please pull up Tesla very quickly. Noah, this company is obviously in the headlines literally every single day.
There you go.
Okay, gap down 4% on that negative news coming out of Panasonic and Tesla. Just keep an eye on that. Once again, the ultimate support level is 1250 by 1260 on Tesla. PPI report came out today, economic report. PPI came in at 0.6% increase versus the expectation of 0.3%. Year over year, PPI report, that's the producer's price index, came at 2.2% year over year. Core PPI came in at 0.3% increase versus the expectation of 0.2. Year over year came in at 2.4% year over year. Inflation is creeping up according to the producer's price index. Now, for those of you who watched the CPI report coming in yesterday, the CPI report came in about 2% year over year. But remember, when the PPI report comes in above the CPI report, a lot of times that producer's price index passes on the inflationary impact onto the CPI report in the future. Watch for inflation to start creeping up, in my opinion. And the EU granted an October 31st, 2019 extension to Theresa May and Brexit. And I can't wait for the tweets on October 31st, Halloween.
Yeah, Brexit.
I'm going as Theresa May. What are you going to go as?
I'm going as Corbyn. We should go together. You as Theresa May, me as Corbyn. We'll have some fun.
That's scary.
Can I be the unsigned treaty?
You can be the girl that keeps on throwing water at Mario Draghi every time Draghi gives an ECB press conference.
Oh, too funny. Oh, Tesla.
Actually, one of these times, the tackle trading principles, Noah, myself, and Tim, we should dress up as Jay Powell, Janet Yellen, and Ben Bernanke. That's what we should do.
Well, who's going to be Janet Yellen?
I'll do it.
All right.
So, Tim, you would have to play Bernanke.
Yeah.
And I would have to play the coward Jay Powell.
All right. I like it.
I'm pretty sure
Bitcoin.
that Yellen would win in a fight, though. If you got them in a fight, who would win?
Yellen doesn't need to fight.
She's feisty.
She'd still win.
Yeah, she probably would. I can't imagine Ben Bernanke's ever scrapped in his life. Jay Powell would win.
Jay Powell's scrapped.
Yeah, I bet he's done some bare hands boxing in his day. There's no doubt about it. Boys, we got 10 minutes. What do you want to do? You want to do some theta stuff?
Let's do bear calls.
Let's do bear calls.
Bitcoin's
down, but it's nothing really of note. It's one candle here. It's an more interesting product lately on Bitcoin. We'll come back to that tomorrow. We had a couple of ideas here today, and it's been a bull market, Matt. Most traders who are new, they tend to do well in bull markets because they're more likely to buy. Consumer mindset and all that kind of stuff. But it's very important to learn how to sell and to be bearish and to weight your portfolio and all that kind of stuff. The bear call spread is a core strategy that is a theta strategy that we love, and we teach it all the time. No, we had two candidates that we were going to look at. One was CME, if you'll bring that up. Now, Noah, how would you explain the difference between bear call and bear put to our team out there?
Bear call, I would say, is a theta play. You're selling the premium and you're trying to collect the money on the passage of time. A bear put, I would consider a directional play. You're buying a put to speculate on the direction. You're selling a put down below it to offset some of the expense and risk. And so I always think, debit, direction, credit, cash flow. There's a little memory hook I use for that when I'm teaching people. So yeah, I like the idea of a bear call out here because you don't have to be that aggressive. You could probably go sell a bear call spread, clear out above like 180, 185. You don't have to be that right on the direction. The overall trend bias kind of takes care and sets up. You are heading into earnings a little bit, but you could collect some time decay between now and then.
Mm-hmm. Mm-hmm. Now, Matt, we've got earnings coming up. When you're building your bear call spreads 30, 45 days out, whatever the number is, if the date till expiration is past the earnings, do you disqualify that trade? Do you still willing to take it? What's your approach to that?
No, you got to modify your time frame.
Yeah.
I mean, if you're looking at your standard time frames that you're looking at on bear call spreads is 30 days in a contract, then you have to modify that. That's why weeklies are there. You have to come in and you have to be a little bit more aggressive because we're not going to hold the bear call spread through earnings unless we condor it.
Mm-hmm. Mm-hmm.
Which you certainly could do that. You could sell up, for far enough away, enough time frame away to eventually do a bull put and wrap it around earnings. But for this purpose, though, thank you, Cody, for that text message. Zero just broke 12:55. But in terms of this, you just want to modify that time frame to lower that time frame to fit within the earnings.
A lot of those healthcare names also come into play here. There's a different relationship between the pivots. But if you take a look at Cigna as well, I think that you've got a qualified or available bear call spread here. But again, earnings are coming up on so many of these companies. And so you've got to be quick on the trigger. You've got to modify the time frame. You got about 3 weeks on these ones that we just looked at, by the way, 21 days or so, which leaves it still in play for me. It's got to be outside of about 10, 14 days for me personally. And then we looked at Ameritrade, AMTD as well. Cody, what are the candidates? We had a couple other ones that we were looking at for bear calls, I believe.
There were quite a few. Some of them started getting eliminated because of earnings, but Biogen was on there.
IB.
Yep. And even though it had that weird gap back from when they had the failed Alzheimer's drug, I like this one. Earnings a little bit close, but let's see what else we had. We had Humana on there. We had HUM. So might have already moved a little bit too much as well as earnings. We had Gild, GILD. Earnings a little bit further out on this one.
Mm-hmm.
So
if you're going to, any more, Code?
Those are the main ones I think are going to work.
Yeah.
I prepped a couple of them. I prepped Cigna and CME, and both of them look like they would have a good return, even in 2 weeks right before earnings, or 3 weeks. You can still get a good ROI on them.
They're out first week of May. I mean, if you have to build theta in your account, and by the way, if you're a cash flow trader and theta is your core strategy, you should do that. And you want to add something bearish to naturally offset the delta that you have bullish in your account. By no stretch are we saying you should be a bearish trader at this point in the market, Matt. Markets are still mildly bullish, but traders take some bull, some bear whenever they're trading. If we're going to pick one of those and model it out here, Noah, Matt, which one did you like the most?
I kind of like the Cigna.
Cigna. Let's do it. CI. Okay. Noah, prep a bear call on the Analyze tab. And let's run through this one.
All right. So we want to go, what's the expiration or what's the earnings date? The 2nd?
Mm-hmm.
Is that right?
5/2.
5/2. So that would probably put us into using these. You could use the 3 of May's. That would be right after expiration. 26 of April's probably give you a little bit. You don't have to worry about it. So we could do 26 April's. My personal rule for call spreads is, 25 or less. I usually am trying to shoot for 20 or less. 170, 170, 250. There's a little premium in there. And as far as, if we were to take the 170 by 172 or 175, let's do a vertical there. 42 cents on a 250 spread's not a bad ROI. And expiration date on that was 4/26. You're just inside that probability cone, which I prefer to be outside that, just from being a little bit less aggressive on that trade. Let's see where 170 is on
the chart. 175, you get
right at
4 cents on it.
Yeah. So if we go 175, I might go a little higher, 172.50 by 75. You won't get as much money out of it, but you'll have a higher probability of winning. So, and then I always go for probabilities. I don't go, greed's not the driving factor there. I'm trying to play the odds and just keep it as a numerical, play. So if I went 172.50 by 175, 21 cents on a 250 spread, that's what, 8% ballpark.
8% over 2 weeks.
Over 2 weeks.
Trade.
That's slightly better than, kicking the shins. And you've got 2 levels of resistance out there. You got 170 and you got 172. So you got 2 levels of resistance to help run interference, some downward confirmation. And you'd be out by earnings. So, that's just a saying. I think that downward trend pressure is going to stay. I don't see it rallying anytime soon.
The earnings brings in extra volatility, obviously, in the options. So the any option chain after that earnings date. And by the way, what I would strongly recommend out there to halftime crew is make sure you get that Tackle Theta research spreadsheet and run the numbers on 4 or 5 different candidates, so you can handpick which one you like the best. We've done that many, many times in the halftime report. But these ones right before earnings, the theta is going to ramp up very, very quickly here, Noah. They're more aggressive. You got to know how to manage it. It's an interesting trade. I might actually prefer delta now that I look at it. 8% on the probability at 21 delta. I'm not sure that actually would click for me and make me want to do it. 172.50 is an old pivot point. I would know how to manage it. I've got $10 cushion, which is about 2.5, 3 ATR cushion. This one's on the fence for me. I don't know about you.
Well, it is a probability number. And again, you could go with expirations out past the earnings announcement and just look to close the trade early. That might give you a slightly higher probability and again, give you a decent ROI that because they're past earnings, like you mentioned earlier, they would probably have a slightly more inflated premium. So you could go a little bit further away strike wise. But other than that, you never force a trade. If it doesn't meet your rules, it doesn't meet your rules.
That's right. Mock up CME real quick. Let's kind of do the same thing. We'll compare 2 of them here because I like both patterns. I actually might like CME better for a bear call. Same basic date. So we're going to look at the same analysis.
So if we did the same candidate there, and again, we picked the strike price, 175 by 180. It looks like you got a crazy wide spread on the 180 with the 0 bid-ask spread. You might still be able to get filled on that. 21 delta. Let's analyze that little vertical right there. And 36 cents on a 250 spread's not too shabby. But how comfortable do I feel about that strike price? at a 175. So again, set that expiration date out to the same date. That's inside probability cone. It means it better be out above resistance. 175 feels a bit close without the downward confirmation. If I could, that big support resistance zone there at 175, I personally would feel more comfortable rolling that up to 177.50 by 180 if you could squeeze some premium out of it. Looks like you could squeeze 18 cents, which is a little lean. So I'm not feeling like I love that short-term bear call spread. I might go out past earnings and see if I could build one further out.
Oh, patterns are interesting. All the healthcare stocks are interesting. I would probably keep running numbers if I had to put something on. But quite frankly, if it doesn't meet your rule, then you got to just pass and move on. On a lazy day in the market, sometimes you can maybe make this too complicated, try to force the action. Here we are on Theta Thursday. We wanted to come up with a topic, find something pivoting, but Delta might actually be more in play for me. It would be an open debate and an open discussion. I'm sure there's a bear call spread out there. What I've found in markets like this, though, bear calls are hard to get good ROIs on. Noah, have you found that as well?
They've been a little lean, that's for sure. And so when I have found them, and I basically just, like you were saying, Tim, I've run a bunch of numbers looking for candidates that did work. And I had to run through a lot of candidates to get stuff I was comfortable with that matched my numbers and rules. So I've been able to put 2 or 3 on, but that's the extent of it.
Matt, I'm going to bring Matt in here. Last thought, Matt, if the numbers don't grab your attention, you're not going to force the issue, right?
No, I absolutely not. I mean, first and foremost, if you're gonna place 2 or 3 bear call spreads, you should research 10 to 15 of them.
I agree.
That's number one. Number two, I think we should pull up the VIX and have a 45-minute discussion on why volatility is low.
I would be happy to do that. Not today.
Are you sure?
No, the Masters is on. Come on.
I haven't been paying attention for 15 minutes. I've been watching Tiger miss 3-foot putts.
Oh, Tiger. Listen.
Does that increase your volatility, Matt?
It increases my personal volatility. Yes, it does.
You know who hasn't been missing 3-foot putts?
Who?
Henry Stenson.
No,
Henry
in the
Stenson.
traders lounge this morning, traders were raving about the short-term swing trades that Frank has been putting out on Tackle Trading Twitter.
Nice.
So if you do not follow Tackle Trading Twitter, we were going over the trade setup, specific entry, had a great lounge this morning. It's a pro product, so if you need a 15-day free trial, come sign up. Join us every 11 a.m. Eastern, where we go over a lot of trade setups and ask questions. But the lounge students were raving about the trade setups that Frank. One person said Frank is my own personal watch list.
He's guys. Tackle Trading's Twitter, but our entire presence on Twitter has expanded greatly. So we like to stay active over there, guys. Obviously, we're active in the clubhouse as well, but definitely go follow Frank on Twitter. Follow Tackle Trading. Follow myself, Matt Justice 13, Tim Justice Utah. Cody, what's yours? What's yours off top? What's your handle?
CMackey014, I think.
Yeah, and then just if you want to be a part of the Team Tackle on Twitter, just message Frankie and he can get you into the Team Tackle. And the last thing I'll say is, Tim, how did Mark become our #1 pitch fan?
He's got a streak going.
The Trading Justice podcast this week inspired me to be a better salesman.
Good.
I like it.
And so Trading Justice podcast, download it if you haven't listened.
What is true sales about? It's not about hard selling. It's about value and communication. That's what true sales is about.
And when you believe in the product, it's easy to pitch.
Well, I noticed that none of you have pitched Noah's Twitter. So does that mean you don't believe in Noah's Twitter account?
I was actually going to say that.
I was just holding it in there at Noah Rem.
Thank you.
Cody, you're 014. Did you set up your Twitter account when you were 14? Is there a connection?
No, I think that was the random one they assigned, but that is my college graduation year, so maybe that's where it came from.
Maybe.
I don't remember.
Maybe. Earnings tomorrow.
Greatest quarterback of all time, Dan Marino.
13. Tom Brady's the greatest quarterback of all time. But
get out of here with that.
Yeah. Tomorrow morning, JP Morgan, Wells Fargo. Tonight, Mark, what do we got at Tackle Trading the next couple of days?
Cash Flow Club tonight. Thursday night, 8:30, going over cash flow strategies. We have the lounge in the morning. Wells Fargo, JP Morgan. For me, the official start of earnings season begins tomorrow. Once again, in the lounge this morning, I went over some ideas on how I'm looking to prep trades on JP Morgan and Wells Fargo tomorrow. Wells Fargo has a really nice level of support that I'm looking to get into. If you have a little bump down, might even sell a naked put heading into earnings, which is not my cup of tea, except I would actually like to own 100 shares of Wells Fargo. So, but earnings season, and it's going to be a big one. It's going to be a big one. This lazy price action you saw this week is about to end. Things could get a lot more interesting in the coming trading days.
I think so. I think we are going to get out of this rut at some point. No pun intended there. All right, guys, very good job here today. Great job, Noah, Cody, Mark, Matt, and from Tackle Trading, guys, we're out. We'll be back tomorrow with Friday Fun Day. And Mark and myself and Cody are going to be here actually running Friday Fun Day. Matt, you're on the way to LA. Have a great class down there.
Yeah, I'm going to be enjoying. I'm right off LAX. So if anybody in the LA area wants to come out and say hi, I am literally right by LAX this week.
No, and if it's called Friday Fun Day tomorrow, I'm not showing up.
Okay, what do you want to call it, Mark?
Anything but Friday Fun. I mean, come on.
All right.
Fibonacci Fridays.
See, that is infinitely better. That is infinitely better right there.
Can we please do that tomorrow? Can Noah please do a deep dive on Fibonacci in relationship to Elliott Wave?
Can bet. If that's what you'd like, we can do that.
I think I get the day off is what I just heard.
Don't worry, I'll host. You can take the day off. Enjoy your weekend.
All right, we can do that. Whatever.
Listen, understanding Fibonacci retracements is a very important topic.
I like it. It's a good topic. Technicians will love it.
Technicians will love it. Tim will die 1,000 deaths.
All right.
Well, there's two kinds of people in this world: those who know how to draw fibs and those who don't.
Jim is the latter.
Yeah, that's the ongoing debate. 14-year debate now, by the way. All right, guys, we are done. We're out. This Fibonacci retracement is now going to pivot and go into something else. We'll see you tomorrow. Friday, Fibonacci. What was it? No, I love the accent. That was like a Luigi.
Fibonacci Friday. It's
like
me, Mario Draghi.
We'll see you guys tomorrow.